Good morning, everyone. On behalf of Aeroflex Industries Limited, I extend a very warm welcome to everyone joining us on our call today to discuss the operational and financial performance for Q3 and 9 months FY24. On this call, I'm joined by the management team at Aeroflex and SGA, our investor relation advisor. I hope everyone has had an opportunity to go through the financial results and the investor presentation, which have been uploaded on the stock exchange and on our company's website. In the midst of the prevailing geopolitical tensions that is ongoing in the Middle East and in Russia and Ukraine, we're pleased to highlight that despite all of this, we have had a sustained robust demand for our products stemming from both the traditional and emerging end user industries. Our production volume has surged to 2.98 million meters, marking an impressive 65% year-on-year growth compared to 1.8 million meters in Q3 FY23, while maintaining a 95% capacity utilization. Notwithstanding the challenges which have been posed by the Middle East conflict and the recent crisis of the Red Sea, our exports for the quarter exhibited a robust year-on-year growth of 26%, with noteworthy contributions from key segments such as firefighting and other innovative industries. We are confident that under more typical circumstances, our exports would have had some greater expansion. As part of our strategic planning, we are delighted to announce that we have reduced our dependency on imports. This not only contributes to a reduction in our working capital, but also helps in decrease in raw material inventory. These positive developments underscore our resilience in navigating challenges and reinforce our commitment to adopting and thriving in a dynamic market condition. Coming to our business segment, stainless steel flexible hoses without the braiding, it contributed almost 62% of our revenue for the first 9 months of the current fiscal. Assemblies and fittings, it contributed to 31% of our revenue for the first 9 months, and assemblies will be the focus point of the company in the near future. We intend to emphasize value-added products and aim to increase their share in our overall portfolio. And other business segments include braiding, interlock hoses, and composite hoses, which all together have contributed approximately 7% to our 9 months revenue. Now, talking about our capex plans, as emphasized in the previous quarter, we are progressing as planned to finalize the remaining phase 1 capacity of 1 million meters, thereby taking our overall capacity to 13.5 million meters per annum, and this is expected to be completed by March 2024. Now, talking about the metal bellows, during the quarter we had announced that we have the plan to set up a separate project for metal bellows and expansion joints with a capacity of 3 lakh pieces per year, which will be completed in 2 phases. As part of phase 1, we are setting up a new manufacturing facility to manufacture 1,20,000 units of metal bellows per year, ranging from a diameter of 25 mm to 600 mm. And we are currently in the process of leasing a building space to set up the plant for metal bellows, and the first phase of the metal bellows project is expected to be completed by December 2024. Now, talking about composite hose, so at present we have 3 operational lines for producing composite hose, and we can produce composite hose of maximum diameter of 14 inches, and by June 2024 we expect to add 3 more lines of composite hose to our manufacturing capacity, and we hope to manufacture composite hose of maximum diameter of 20 inches. We also are aiming to to automate and to implement robotic assembly lines at our manufacturing plants. Now, talking about the financial performance, first I'll talk about the Q3 results. If you see in terms of the total income, it stood at rupees 74 crores with a growth of 13% on a year-on-year basis. EBITDA came in at rupees 15 crores with a growth of 63% on a year-to-year basis. EBITDA margins stood at 20.2% and profit after tax came in at rupees 9 crores with a growth of 76% on a year-on-year basis. Now, talking about our 9 months of performance, the total income stood at 242 crores with a growth of almost 19%. EBITDA for the 9 months stood at rupees 50 crores with a growth of 46%, and EBITDA margins stood at 20.6%. And profit after tax for the 9 months stood at 32 crores with a growth of 49% on a year-on-year basis. Exports again continue to contribute significantly to our revenues. Exports accounted for almost 85% of our overall revenue, and it is mainly driven by the United States and the European region. And we believe that with our strong balance sheet and with our zero debt, it will help us to expand and capitalize on new opportunities arising from both the traditional and new age industries, and it will help us to give financial leverage to consistently deliver high growth margins and profitability to create the value for all our stakeholders. With this, I would like to conclude my presentation and open the floor for question and answers. Thank you so much, everyone.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Lokesh Maru from Nippon India Mutual Fund. Please go ahead.
Hello, I hope I'm audible. There are 2 questions on the Red Sea issue. Number 1, how much, can you please quantify how much of our sales would have been deferred to Q4 due to this issue? And number 2, how much have our costs actually gone up on logistics front as and when it will be realized in Q4?
So in terms of the sales, we have seen the impact of the Red Sea start from 15th of December when the first when the issue came up. So the last 15 days of December were severely impacted by the Red Sea crisis. We also saw a lot of cancellation of bookings from the shipping lines, and also our customers, because of the significant increase in freight costs which the shipping lines implemented, our customers have deferred their dispatches. So the real impact was happened in the last 15 days. So if you do proportionate, so approximately 15% of our revenue got impacted because of the Red Sea crisis, and unfortunately this continued in the month of January, till mid of January. But slowly now we are seeing that the crisis is slowly beginning to wave off, and hopefully I think from the month of February everything will be smoothlined again, and we will be back to normalcy very soon. And in terms of the cost, in the third quarter the cost has not yet been reflected. The reason being because the cost that have increased are for the shipments happening from December and from January. So there will be some impact on increase in logistics cost, especially on account of higher freight. and that would be seen in the Q4. But we are discussing with our logistics team and with our logistics partner and also with our customers, to help us to overcome this crisis. And we are positive that, in the next few months, everything will be smoothlined again.
Okay, understood. Thank you so much.
Thank you.
Thank you. The next question is from the line of Mahesh Bendre from LIC Mutual Fund. Please go ahead.
Hi, sir. Thank you so much for the opportunity. So on the export side, we supply based on CI basis or is it on FOB basis?
So we have a mixture of both CIF and FOB basis. With some of our customers, we work on CIF basis, and with a lot of our customers, we work on FOB. So we have a good mixture of both CIF and FOB basis.
So since the freight has gone up, so that will impact CIF basis shipments, right?
It actually affects both CIF and FOB. I'll explain to you. In case of CIF basis, the impact that we have is in terms of the direct increase in logistics cost. But in case of FOB basis, also what happens is because the customer is getting the very high freight, he delays the shipment. So in case he delays the shipment, that shipment actually becomes an inventory at our place. So we in turn face the cost of increased inventory cost. So in both the cases, we have there is a cost which is borne by the company. So we actually prefer CIF basis because in that we have more control of the goods that we have, and we can negotiate better with our vendors, especially the logistics companies. But a lot of our customers have their own terms which they buy on.
Sure. And sir, just want to understand the outlook for the next 12 to 18 months, both on domestic side, international side. What kind of growth you anticipate on both markets?
So we have a lot of projects ongoing. As you would have heard from my speech, that we have a project into composite hose which is ongoing. We have a very big project in terms of metal bellows which is ongoing, and also we are increasing the capacity at our existing factory also to increase the production of stainless steel flexible solutions. So and most of these capacity expansions would be completed by the end of this calendar year, or maximum by the end of the next financial year. So the real impact of all our ongoing projects would be seen in FY25-26. So we have a lot of projects in the pipeline, and we hope that the growth that we have seen in the past 4 years, we expect the same growth percentage to happen over the next 4 years as well. And for that, we have already started with all the planning for CapEx.
So last question from my end. What is the current capacity?
Currently, we are utilizing almost 96%. Now, 96% is the reason because we determine our capacity in case of meters. Now, what happens is, say for example, if we manufacture hoses ranging from a quarter inch in diameter all the way up to 14 inches in diameter, and we have different machines to manufacture different diameter of hoses. So we generally what happens is our capacity is in terms of the meters. But if we manufacture the smaller size hose, our capacity in meters would be high, but the production in kg would be slightly low because of the diameter of the hose. And similarly, if we manufacture the bigger diameter hose, the production in meter would be low, but the production in kg would be higher. So we have a typical scenario of where we need to monitor our production in meters also, and in kgs also, and ultimately in value also. Because when we sell our assembly products, those come with the fittings and with couplings which currently we are procuring, from our contract manufacturers from outside.
Sure, sir. Thank you so much.
Thank you.
Thank you. Before we take the next question, a reminder to participants that you can press star and 1 to join the question queue. The next question is from the line of Pritesh Chheda from Lucky Investments. Please go ahead.
Yes, sir. I just have one question, and it's a follow-up to what you answered in the previous question. There is this interplay of meters and tonnages when we look at your capacity. My guess is when you would have put up these capacities, you would have taken an optimum mix of a certain dia hose pipe. However, there can be a situation where a particular quarter you might make a low dia, a particular quarter you might make a larger dia or a mix of it. So optimally, based on this 11.5 million meter capacity that you had, and that particular capacity which was your original capacity, what kind of revenues on optimal mix is possible, considering the current stainless steel prices, obviously, from that 11.5 million meters? That would be a better way to understand your business because of these mixer interplay of meters and tonnages.
So you're right. In some quarters, so I'll give you an example. In the last quarter, which is Q3, we manufactured more of smaller diameter hoses. Now, in that case, our production in meters would go up, but you see that in terms of the sales, value, it will go down because the price per meter is lower, obviously, because for a smaller diameter hose. And in terms of the capacity utilization also, it goes up because of the number of meters produced is much higher. Now, in terms of the optimum revenue or in terms of the optimum value that, say for example, the 11 million meters capacity can make, actually I will not be able to give that answer. The reason being, if I'm selling the 11 million meter only as hoses and not as assemblies, our sales would be capped. Now, if I convert the entire 11 million meters from hoses to an assembly, my sales could almost be 1.5 times more. Because of the additional components. Yeah.
If you could give at the 11 million meter hoses level,
yeah,
when you would have put up this capex, you would have an optimum optimum dia mix in your calculation, right? I will sell 30% or half a inch or one. There will be some optimum. If you would have sold hoses, then what would have been? What can be your revenue?
So I'll have to get back to you, with the exact figure. But generally, what happens is we see, where the demand is coming from, and then accordingly we predict that in terms of in this capacity or in this particular size, we have shortage of capacity and we need to increase our capacity. Like for example, currently we are increasing our capacity in the smaller diameter hoses because over there we have the capacity constraints. There are some of our machines are running almost at 100% capacity. So that is the reason why right now our expansion is happening on the smaller diameter of that is where our capacity constraint is happening.
Okay. And my second question is, sir, on the fitting side of the business, what is now the percentage of your revenue in quarter 3 and 9 months from fitting? And what was it as a percentage of revenue, same quarter last year and 9 months last year, for us to understand, on the fitting side, what has been the growth rate?
So, in terms of the fittings and the assemblies, the entire business of, the 9 months period from April to December, and especially for the last quarter, which is Q3, that is about 38%. And in terms of the 9 months of the previous year, so that was about same 31 to 32% itself. So the reason is that now we have been focusing on increasing the assembly business. The assembly business actually takes a slightly longer the time to build because the customers also have to change their procurement from buying hose to buying assemblies. Hence, it's a slow and steady process, and the real impact of the change in the line will be seen in the next couple of years, especially when we also introduce the metal bellows, because in metal bellows it mostly goes as assemblies only.
So as of now, you reached from 31 to 38%, right?
Yeah.
Okay. And last quarter,
average is 31, and the last quarter average was 38. So we are focusing on increasing the same business of assemblies because that is where the real, the higher value addition also is there.
And lastly, what is the pricing decline that you would have seen on account of stainless steel prices in this year?
The decrease in prices has been about 20 to 25%.
So stainless steel price is down 20 to 25%. So our product prices will be down 12 to 15%, right? By virtue of RM.
Yeah, approximately.
Okay. Thank you very much, sir. Thank you.
Yes.
Thank you. The next question is from the line of Manav Vijay from Deep Financial Consultants Private Limited. Please go ahead.
Yes, thank you very much, sir. Am I audible?
Yes.
Okay, thank you. So first question is regarding the impact on sales that we had due to the Red Sea crisis. So you mentioned that we lost around 15 days of sales. That would be around 10-12 crores, correct?
Yes, approximately.
Okay. Second, since I believe that you anyways were producing, so the production was going on in your factory and you could not ship it. So inventory levels would have moved up for you. If I'm correct, the working capital generally is at 100 days. So this quarter end, it was slightly moved up. Would that be a correct assumption?
Yeah, so the inventory moved up only slightly. I'll tell you the reason why. It's because the finished goods inventory moved up a lot because obviously the last 15 days were really impacted. But the raw material inventory has gone down in the last quarter. Reason being that we have reduced our dependency on imports. So now in the current year, only 50% or slightly less than 50% of our coil is imported, whereas the same thing last year, almost 95% of our coil was imported. So we have reduced our dependency on imports. So overall inventory, yes, has gone up slightly, but it has not been impacted severely in terms of because there are finished goods inventory has gone up significantly, raw material inventory has gone down.
Perfect. Sir, my next question is, so whatever sales loss that happened, or let's say sales that got deferred in Q3, and you mentioned that the problem has continued even in the month of January. So now since you have confirmed orders, so all these sales will come whether in Q4 partly or in Q1. You will have a bunch of sales. It will happen.
Yeah. So you're right. So the impact of the Q3 sales would go into Q4, and the impact of the Q4 sales would be carry forward to Q1. So if this entire crisis fades away, then by Q1 all the impact of the Red Sea crisis would be you would see in the results, and then after that it will be more or less stable. So yeah, because what happens is if a customer has delayed some shipment, then he will also delay his future shipment. So it actually becomes a cascading effect. But I think the real impact of this entire crisis, I think we expect hopefully by February everything to be smoothened down, and by Q1 everything should be back to normal.
Okay. And sir, considering all this, you believe that the margins that we had last year of 20%, we should be in a position to do margins better than that? Because like the way I think you mentioned to the previous caller's question, is that compared to a 20%-25% fall in the steel in the SS prices, you have reduced that only by 10%-15%. So you have been able to retain some part of the reduction. So your margins will move up.
Yes. So, see, in the past couple of quarters, our focus has been extensively on improving our margins. And that is where even in the near future, the focus of the company would be on maintaining and growing its margins. Now, if this Red Sea crisis would not have happened, our margins would have been even better than what they are right now. But yes, our aim would be to increase our margins on a quarter-on-quarter basis.
Okay. So one last thing from my side. So now you have, so you are in the process of increasing your capacity from 12.5 to 13.5. Even the metal bellow project is also coming up. So if you can help us understand, what efforts you are doing to increase the geographies that you already cover, to also increase the number of customers, because you do need capacity. You do need new names and geographies to sell the new capacity.
So in terms of the plan for sales, so one is that we are ramping up our sales team. So in terms of specifically geography and region wise, I would say 2 to 3 years back we had about 4 to 5 people in sales, and especially in export sales. Now we have about 15 people in export sales, and by the end of the next financial year we would be having approximately 30 to 40 people in export sales. So one is building up the sales team, and the sales team would be built on geography wise. So some would be handling the European region, some would be handling the USA and North America, some will be handling South America, and so on. So one is that. Second is in terms of our share of business from our existing customers. So the reason that we have gone into composite hoses and metal bellows is that a lot of our customers, especially in the export market, they are buying these products. So it helps us to increase our share of business from our existing customers also. Plus also it helps us to get new customers when we offer an entire basket of products. It helps us in also getting more customers, especially in the international market, where they always look for a supplier from whom they can buy an entire basket of products. So it will help us to grow both our existing customers also and help us to tap new customers as well.
Okay, perfect. Thank you and all the best.
Thank you so much.
Thank you. The next question is from the line of Rusmik Ota from 9 Rays Equi Research. Please go ahead.
Yeah, sir, thanks for the opportunity. I have 3 questions. First, on the margins. As you mentioned, assemblies account for around 38% of the revenue. Assuming you have a blended margin of 20% EBITDA, is it safe to assume that we make around 25% EBITDA margin in the assembly and fitting business, and maybe around 15 to 16% in the hoses business?
Yes. So our on average in terms of industry flexible hoses, we make about anywhere between 16 to 18% of margin in terms of EBITDA, and for assemblies and fittings, it ranges from 22 to 24% on average.
Okay. And so give me some understanding of this metal bellows business. What kind of realization will it be better than our existing business, or how does realization or margins look like in this business going forward?
So in metal bellows, the average margin ranges between 25 to 30%. And metal bellows are used in many industries where we are already supplying our products. So this will be a value added item which will have a positive effect on both the the top line and even more on the bottom line.
Okay. Out of the 3 lakh capacity for metal bellows, we'll be commissioning 1.2 million next year. That is 1.2 lakh
pieces. So in metal bellows, it is not calculated in terms of meters. It is calculated in terms of pieces.
Okay. So if you have 1.2 lakhs pieces of capacity next year, what kind of revenue you can generate in FY26 from this 1.2 lakh pieces, roughly?
Approximately at 1.2 lakh pieces, we'll be able to generate close to 50 crores of sales.
Okay. Sir, if you can share some figures on the CapEx, because this year our capacity is going up from 11 to 13 million, and then next year it is going up from 13.5 to 16.5. So both the years we are seeing around 22% jump in capacity. So what kind of CapEx are we spending this year and next year on this?
So in terms of the capacity, in terms of to increase from 13.5 to 16.5, we would be, this is planned for the next financial year, we would be approximately doing a capex of between 35 to 40 crores. For the metal bellows, we have estimated about 43 to 44 crore rupees for the overall, capex for the metal bellows project. And obviously, there will be some working capital also required in terms of to grow the business. So that would be additional. And yes.
Yeah, and for this year's capex, which is like 11 million going to 13.5, how much are we spending this year, sir?
We have already, so from 11 to 12.5, we have already commissioned and it's already, started, the production. From 12.5 to 13.5, we will be completing in this quarter. It should be completed by March. So that overall would be an approximate, capex of about 30 crores.
Okay. And my next question, sir, in your presentation, you mentioned that you want to enter new segments like aerospace, semiconductor, EV, robotics, defense, etc. So what's the timeline by when do you see you'll be able to have some breakthrough in this industry, and what kind of share of revenue you aim to have from these new businesses or new segments?
So in terms of EV, we have already started developing a project with one of our customers to develop a specific product which will be used in the EV industry. So the development of the product has already started. With regards to the aerospace industry, we have started the discussions with a few companies who are in this sector, who are ultimately the tier 1 suppliers to the likes of ISRO and all the aerospace companies. So we are already started our talks with them. I think we are aiming that in the next financial year we'll definitely starting off with some business both in the aerospace and in the EV space.
Okay. And the last question, sir, you mentioned also about some inorganic acquisitions also to expand the business. What kind of acquisition targets are you looking at? Will it be in the same business or some related business, or what kind of amount you want to spend on this kind of acquisitions? If you can just give us some understanding on it, it will be helpful.
So in terms of our philosophy for inorganic acquisition is basically threefold. One is we are looking at something which is forward, wherein to have some acquisition in either in the US or in the European countries, where it will be a forward acquisition. We are also in a discussion for a backward acquisition, which will help us to manufacture our raw materials, especially in terms of the fittings that we procure. And then there is a third strategy where we look for companies who are selling the same customers but slightly different products, wherein we can increase our overall basket of offerings to our customers. So this is the three philosophies that we are currently working on. We are still in discussions with a few companies regarding the same. So when something is finalized, we'll surely update.
Okay. And just to, my last question is just to summarize, because I think this year, next year, capacities are going up by around 22-23%, and you have also the metal bellows capacities coming up. So the next 3 to 4 years, is it safe to assume that you should grow your top line at least at around 20-25% in that range?
So our aim is that in the last 4 years, like the previous 4 years, if you see, we have grown at about 25%, and in the next 4 to 5 years, we are hoping to do the same. Obviously, I will not be able to give a specific number to that, but yes, we have a lot of projects which are ongoing, and a lot of new projects are also still under the discussion phase. So we are, aiming for a strong growth. But along with growing the top line, we also have a strong focus on growing the bottom line as well. That's why if you see the bellows, the project, although it will contribute a lot to the top line, but it will contribute even more significantly to the bottom line also. So hence we are looking for a profitable growth, and especially into those products which are actually or which will generate us higher profit than our existing products.
Okay. That's it from my side, sir. Thanks for the opportunity and best of luck.
Thank you.
Thank you. Before we take the next question, we request participants to please limit your questions to 2 per participant. For follow-up questions, you may rejoin the queue. We take the next question from the line of Hiten Boricha from Sequent Investments. Please go ahead.
Hello.
Yes.
So, can you share the volume number for Q2 and Q1 as well as for FY23?
Volume in terms of meters or volume in terms of?
Million meters.
Yes.
You have given for Q3 FY24 and last year. So if you can share the numbers for Q2, Q1 and FY23.
Just give me a second. So in terms of just a second, I will probably share with you the details in terms of kgs. I think that will help. So if you see in terms of the 9 months. Hello?
Yes.
Yeah. In terms of 9 months, so in terms of kgs, we have grown about 18%.
Okay.
From about 3,200 metric tons to about 3,800 metric tons. This is a ballpark figure.
From 3,200 to 3,800.
The metric tons.
This is for 9 months number.
Yeah, this is for 9 months number.
Okay. So if you can share this number in million meters, that would be helpful, sir, because in our presentation we have shared the numbers in million meters.
Actually, there is some background noise from your end, so I'm not able to hear you. Can you just...
Sir. Yeah. So in our presentation we have given the numbers in million meters. If you can share the number in that.
Yes, I'll just share this in a minute. So in terms of million meters, Hello? Am I audible?
Yes, sir. Yeah.
In terms of million meters, in Q1 of current financial year, it was 31 million. Sorry, 3.1 million. I'm sorry. In Q2, it was about 2.87 million. And in Q3, it's about 2.98 million.
Okay. 3.1 for Q1, 2.87 and 2.9. And what was for FY23?
FY23, Q1 was 2.6.
The whole FY23. I just want to full year.
Whole FY23. Okay, I will give it. For whole FY23, will give it one second.
No.
Give me 1 second. For whole FY23, I'll just give you the number. 1 second.
Till then, sir, I have a question on employee expense. So as you mentioned, we are looking to add employees in the export sales from currently 10 to 15 members to roughly around 40 members. So what kind of increase we can see in this particular line item? Because as of now, it is stable around 6 to 6.5 crores.
So, see, in terms of, obviously, if you see our employee costs also, the reason that we'll have to onboard new sales people because we want to grow our business. Obviously, that will have an increase in our employee benefit expenses, but simultaneously, that will also result in increase in higher sales. So ultimately, our margins will not be affected just because of the increase in the sales people.
Okay. So it will grow in line with our sales, right?
Yeah, it grow in line with the sales. For some projects, like specifically maybe bellows project, there might be slightly higher, employee costs to start with, reason being because when you start a new project, obviously you'll have to get on board the people first and then, you'll be able to see the results. So only for the bellows, the project will see slightly higher, employee costs to start with, but obviously, once the project is streamlined and is into full-fledged production, obviously, the cost in the bellows project also would come down.
Understood. No problem, sir. Thank you.
And
I'll take that number offline, sir. No problem.
yeah. So I'll just give you a ballpark figure. So the total, volume last time, which is FY23 was approximately 9.15 million.
Okay, sir. Thank you so much.
Thank you. The next question is from the line of Dhruv Bhatia from Bank of India Investment Managers. Please go ahead.
Hi, good morning, Masud. So my first question is, you just mentioned the production volume numbers of 2.98 for Q3. Is it possible to share the sales volume number because, the impact of exports because of the trade issue? What would be the sales volume number for the quarter?
Let me just check that this minute. Just give me a second. So we have the data for right. I don't have the data for the sales in meters with me handy. I have the data for sales in kgs. So in an approximate figure that's about 1,140 metric tons for the last quarter basically.
And this would be what in the last year same quarter then?
Last year same quarter. 1 second. I'll just give you. Last year same quarter was 976.
976. Okay. So okay.
About 17% growth.
Okay. And the second question was to understand that, you talked about in the presentation, you've mentioned that exports have grown by about 26%. If I do the reverse calculation, it seems like domestic sales has de-grown by about 30% on a year-on-year basis.
Yeah. So it's more on the value terms because in domestic, what happens is because last year the same time, the same quarter, there was a very big project of JSW, which obviously had a higher impact on the domestic sales. And the same, it was a one-time project, and that is why last year the domestic sales for that quarter, like for this quarter of last year, was higher.
Understood.
But if you see overall for the 9 months, our domestic sales has also grown. Obviously, I don't have the data right away with me, but probably in the next investor call, I'll share the details of domestic and export sales.
Okay. And going by the logistics challenge that you're facing, and it was just 15 days in December, and probably January, I think the entire January was that issue. What you had envisaged for the entire year in terms of growth outlook versus what you will probably achieve, there will be a gap, right? Because, I'm assuming Q4 will be even worse than Q3, going by the impact that you see because of logistics.
So, January is not completely gone because of the logistics issue. In some areas where, especially say, for example, a business in Southeast Asia, a business in South America, those have not been impacted, and also the business in the domestic market, right? Those have not been impacted by the Red Sea. So, Q4, obviously, even in Q3, we were definitely hoping to do much better than what happened. Also, in Q4, we'll be definitely hoping to do much better than Q3. Obviously, we are, working with our logistics team and with our shipping partners and along also with some more importantly our customers to ensure that whatever the penalty in December, those get fulfilled in January itself. And then definitely that we expect Q4 to be better than Q3. Obviously, our overall target would be impacted because of this issue. But if you see in terms of our target for profitability, so we have and I'm sure we will exceed our target of profitability for the financial year, because as a team we have also focused a lot on profitability as a core to our business metrics.
Sure. And going by, for your freight costs, when I see last year's number, it seems like they're somewhere between 11 to 12% of sales. And because of this impact of logistics, how are you looking to still maintain margins going ahead? How are you going to counter this? Is it just purely through the sales mix where assembly mix will be increasing and that will drive better profitability, or is there anything else to counter the impact of logistics cost?
So obviously there will be some impact of increase in logistics costs due to these crises, but as a team we are working with our customers to share this cost with our customers. Obviously, as you know, some may agree, some may don't agree. Plus also we are planning to also reduce our material consumption also to have a much better mix of products which will ultimately offset or overcome our increase in the logistics cost. So and plus as a company also we are looking at other areas. So say for example, if the logistics cost is increasing, we are looking at other cost items where we feel that we can reduce this cost so that ultimately our profitability is not impacted.
Understood. And just the last question is to understand on from your, I know you don't share order book numbers, but from customers, providing you growth visibility. Do you have the next 6 to 9 months of growth visibility from customers, or if you could just provide something on that, some color on that?
A rough estimate of how much quantity that they will require in this calendar year. Especially these are our large customers to whom we sell our products. So from that angle we get a visibility of the entire year. Although in case of some external shocks in terms of any external crisis or anything, these numbers could change in the middle of the year. But generally, we have seen that unless and it is some impact like a COVID or some really big geopolitical event, such numbers generally don't change during the year. So some of our large customers, they do, give us a tentative guideline in terms of the quantity that they'll be buying from us in this current calendar year.
Understood. Very clear. Thank you so much and all the best.
Thank you so much.
Thank you. Before we take the next question, a request to participants to please limit your questions to 2 per participant. The next question is from the line of Pritesh Chheda from Lucky Investments. Please go ahead.
So just on the metal bellow project, you mentioned 50 crores for 120,000 pieces, right?
Yes. Yes.
What is the tonnage that we might see from such type of quantities of metal bellow? And from a realization or a value addition perspective, if hose pipe is, let's say, 1.4x of the stainless steel price, because I think your RM to sales is 60%. In case of metal bellow, what is the value addition over steel?
So, metal bellows approximately, it's about 50% is the material cost as compared to the sale price. But that in turn, there's a slight increase in employee cost because the process to make metal bellows is slightly slower as compared to a metal hose. So there is slightly increase in employee cost. Simultaneously, there is a slightly reduction in the raw material consumed. Now, in terms of tonnage, so obviously, metal bellows is not actually, so there is no tonnage per se. It ultimately then, at the time of, when we are producing the bellows, in terms of raw material consumed, that time it will give you an idea about the tonnage. But right now, it will, I will not be able to share the data on exactly tonnage, that it will give. Because generally, metal bellows are not sold on per ton basis. They are actually sold on per piece basis.
Okay. And so just one clarification. You mentioned the 9-month volume in tonnage at 3,800 metric tons, which is very good that you have 18% volume growth.
Yes.
But in your commentary, you're mentioning that, you have sold a lot of lower dia pipes, lower dia hose pipes.
Yes.
But when I look at the million meter number, then ideally the million meter number growth should have been more than the volume growth, right, in the kg.
So this is the average of the 9 months. So when I said that we have produced higher million meters, that was for the last quarter Q3. And for the numbers that you said, those are for the 9 months from April to December.
So, but the similar observation you had in quarter 2 also, right? Where you had a higher capacity utilization because of the million meters lower dia hole.
Yeah. But at that time, our consumption was lower.
Okay, sir. Thank you very much.
Thank you. Due to time constraints, we'll be able to take one last question. We take the last question from the line of Suruchi Parmar from NX Wealth Management. Please go ahead.
Yeah, good afternoon, sir. Just a few questions from my side. In this metal bellows, in the last phone call, you have said that you will be doing the CapEx in your existing plant only. But this time you have given that there is a plant setup will be there, separate plant setup of 80,000 square feet around, and you'll be taking it on lease. So, can you guide why this is happening?
So, yeah. So one is that metal bellows, the project was planned to have, we planned it to have it at a new setup only. The land that we acquired, which is right next to our factory, that will be utilized to increase our production capacity of assembly. Hopefully in the next quarter, we'll start the construction on the new land, and that will be for specifically to increase the capacity for stainless steel assembly. And the bellows project, it could, because the bellows project also requires, a lot bigger space in terms of infrastructure, and hence we decided that to have it at at a separate factory.
Okay. Okay, sir. And just for metal belows, you are eyeing the customers which are presently with you, or you will be going to different geographies for this?
So in terms of geographies will remain more or less the same. We'll be selling metal belows both to our existing customers who we supply both in the domestic market as well as in the export market. But simultaneously also, with metal belows we'll be able to get more new customers in the international market and in the domestic market who, one, specifically only require metal bellows, and second, who buy metal bellows, and along with that they also buy stainless steel hoses. So that will give us an opportunity to create a new market for our existing products also.
Mm-hmm. Okay, sir. And going forward, which segment will you think will contribute to the revenue more in next 1 to 2 years? What do you think which segment of yours is going to contribute more?
So definitely, stainless steel hose and assemblies is our core business, and it will contribute the most to our business over the next 4 to 5 years, without a doubt. The metal bellows project itself will be completed by the end of this calendar year, and the impact of the first phase, I'm talking about the first phase, will be completed by December of this calendar year, and in terms of the production, in terms of the sales of the first phase, the real impact you will see in FY25-26. Okay, and then obviously the second phase will start, and then that will be completed. So at least in the next 4 to 5 years, stainless steel hose and assemblies would be our core business and would remain to be and will continue to be our core business.
Okay. And sir, you were going expanding your business in Middle East also. So any positive news regarding this area, Middle East?
So our focus is that in the next financial year or in this calendar year, that we want to get a lot of our business from Middle East also, because we feel that the Middle East has a huge potential which we have not yet tapped, because our focus mostly was into the European and the USA region. But in the next financial year, which is FY24-25, we will be having a strong focus on the Middle East market, the Middle East and the North Africa market, and we hope that to do significant amount of our business from there. So we have already in plans. We are building up a team, specifically for the Middle East region also.
Okay, so the margins there also is comparable to America and Europe, or there's difference in margins?
Almost the same.
Almost the same. Okay, thank you. And you have mentioned in your presentation that you have got more business doing fire sprinklers.
Yes.
So I just want to get to know that the fire sprinklers, you have mentioned new innovative products which are coming that are also in some fire sprinklers for EV buses and some other spiral hose also fire sprinklers. So what kind of fire sprinklers right now you are doing?
We are doing fire sprinklers which is mostly used in buildings. Whether it's so basically mostly into real estate. Fire sprinklers in the real estate, like in commercial buildings and residential buildings.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to the management team for closing comments.
Thank you so much everyone for joining. If I was not able to answer any questions or anything, you can get in touch with SGA with your queries, and we'll answer them as early as possible. I appreciate your time and showing interest in our company, and we look forward to meeting all of you over the next call. Thank you so much and have a good week.
Thank you very much. On behalf of Aeroflex Industries Limited, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.